and the market fell 400 points.
Absolutely.
My friends overseas, I talked to Robin Griffith, as I mentioned to you, on Tuesday. And Robin, who's a pretty astute individual, said to me that he doesn't like this market. He said, I think we're going to hit the lows again. He said that there are so many things going on, particularly with the hedge funds and others that. And I agree with him. We've had our market's only down 1% for the year, versus what's gone on in Japan and other areas. And many of our stocks, whether they be agrium, potash, some of the oils, have companies like Metro and in Canada, are very close to their highs. Not potash and agrium, but I'm just talking about some of our stocks. And so they've got beyond our buying limits. So we're in this trading pattern. We've been taking some profits in the past week, building up more reserves. And I guess when you take a look at our average portfolios at this time, we're talking 20% below the balance, and in some cases 30% below. I mean, that's quite a call, having these very, very large cash reserves. We're going to stay that way for the time being, because there are things out there that certainly worries me. On the other hand, when you take a look at the pluses, China's up 24%, in the past 6 weeks. The Baltic Index has turned, as I mentioned last week. Whether it's turned for good, I wouldn't know. I looked at the news in the last couple of days. The ports in China are busy. Whether they're just going to stay busy or not, I'm not sure. But they are busier, if that's the word. The couple of things that we're watching, I wish our friend Ron was here, but the Japanese market at 7,600, I think that's off today, about 100 points again this morning, or their morning, technically is beginning to look very interesting. We don't invest in Japan, we invest in Southeast Asia, excluding Japan. But there are certain things happening, and we're going to be monitoring these situations very, very closely over the next, certainly over the next quarter. Many of our companies that we have in our portfolios, whether it be potash or agrium or CAE came out, I think, tonight. But the earnings are better than expectations in many of our companies. I hope it continues, but I have some big question marks at this time. So, David, what I said last week, we're in a trading range, and I think we're going to be in a trading range for a considerable time. Talked to Maureen Farrell this morning in our policy group, and I've never seen a woman so bearish as she is right now.
Oh, really?
The loss of jobs. In the last couple of weeks, luxury goods, have in Canada have fallen like people are not buying. You're saying 2 bankruptcies in Montreal yesterday, or today, I should say, and that's shared by some of my friends overseas when they're looking at some of the larger luxury good companies. They're beginning to really suffer at this time. So, in a nutshell, I'm pleased with our numbers for December, January, and February to date, but we're being very, very careful at this time. Very careful. I think to the point where this preservation of capital is very, very